Hey, welcome back everyone. This is Uncle Frank, and I am not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Okay, happy Columbus Day to my Italian subscribers. The bond market and the banks are closed, but the stock market is open, Cupcake. So let's get ready. We'll start this episode with a glance at where we're at right now as of Friday's close. S&P 500, 5815, up 22.6 for the year. The Dow, 42,863, up 13.7%. And the NASDAQ stands at 18,342, up 24.2%. Gold finished Friday, 26.7630, up 29.2% year to date. Oil still over 75, 75.49, up 5.3%. 10-year Treasury stands at 4.1% yield. Retail sales, big bank results, Netflix earnings. What to know this week? A slew of corporate earnings headline the week ahead as investors continue to debate the Fed Reserve's next move. U.S. stocks rallied on Friday as strong bank earnings sparked optimism for earnings season. The S&P and Dow closed at fresh all-time highs. U.S. 10-year yield rose for a fourth straight week. U.S. corporate credit spreads hit their lowest level since 2005. J.P. Morgan rose 4% after beating Q3 earnings estimates. Wells Fargo jumped 6%. BlackRock rose 4%. So what's the best performing fund sector over the past month? Tech, 9.53%. That's XLK. This week, technology experienced a comeback ahead of Q3 earnings, with tech, energy, and communication sectors leading the markets over the last month. The AI frenzy and semiconductors have paved the way for a surge in tech stocks. Software companies are also experiencing high growth. Now, can you guess the leading sector year to date? I bet you can't. It's utilities at 24.05%. On this slide, I want to talk about the fourth quarter that we're in. I'm sharing this because it's about Wall Street's expectations. It doesn't mean it's right all the time, but it's about seasonal patterns. Wall Street knows about it, but typically retail doesn't. And I'd like to change that for my subscribers. On your screen are the seasonal monthly patterns, the best and worst months for the stock market based on 20-year averages. So let's take a look at the chart. Under the column labeled up months, you'll notice October, November, and December appear for all three of the indexes listed on the left: NYSE Composite, S&P 500, NASDAQ 100. Now, if that's true, then none of the 3 months of the fourth quarter will appear in the weak months column. Now, if you move to the right to the best 3 months, you'll notice November appears for all three indexes, and October only appears for the NASDAQ 100. And if all that's true, then none of the 3 months of the fourth quarter will be listed in the worst months column. So what does that all tell us? Well, the people that are on Wall Street go into this quarter with these expectations because of seasonal pattern history. They think all 3 months of the fourth quarter should be up months, and November is favored to be the best. Seasonality is essentially an average based on history of how the stock market tends to perform throughout the year. Averages are a guide, a tool, but don't forecast with accuracy what will happen this year. That said, some investors and traders may use seasonal tendencies to build strategies or enhance existing ones. That's it. That's all I'm saying. I want you to know that many on Wall Street are building their strategies with this information in mind, not investment advice or advisor. Now, the table on your screen depicts where inflation still is and isn't. Inflation is coming back in focus as the Fed debates its next move. Here's where price pressures are still most evident. That's worth discussing. I think the Bureau of Labor Statistics is compromised and full of shit. I know if we made mistakes at work To the degree they do on revisions, we'd all be fired. But maybe they're not mistakes at all. Maybe they were directed to lie to the American public for political motives. Anyway, the top 5 most persistent inflationary items are auto insurance, rent, housing, earnings, and restaurant meals. The areas we're seeing improvement are gasoline, rental cars, used vehicles, toys, and hotel rooms. So that brings us to the FedWatch tool. I'm bringing it up because of last week's CPI. According to analyst Amir Tokic, who said this was a troubling inflation report because shelter rose by only 0.2%, and yet the core CPI increased by 0.3% month over month, which was higher than expected. Given the strong labor market report and 2 consecutive 0.30% core CPI prints, the Fed is likely to pause the easing campaign in November, which is not good news for the stock market. But we're still in and near record territory, depending on what index you look at, right? According to the FedWatch tool, traders anticipate a 25 basis point cut in November with an 89.1% probability. Persistent tensions in the Middle East moved oil prices higher to offset a 2-day decline this week. The markets are watching Israel's potential response to missile attacks that prompted a rally in gold, defense, and energy markets. Brent rose above 77 a barrel, and West Texas approached 74 a barrel. Further escalations that could impact supply chains could reignite inflation concerns. Now, based on this piece from Saturday the 12th, we already know Israel is going to attack. All there is to argue about is when and to what degree. More specifically, what the targets will be. U.S. officials say Israel has narrowed down its targets for strike on Iran. The strike could happen at any time, U.S. and Israeli officials told NBC News, and could even come during this weekend's Yom Kippur holiday. Biden is probably begging them not to attack oil-related targets. No incumbents want $100 to $200 oil going into an election. We used to be energy independent, but somebody flushed that down the toilet over the past 3 years. Others are concerned Israel will bomb nuclear-related targets, so from what I'm gathering, the powers that be seem to want the attack, but they want the focus to be on military targets only. Then this piece came out Sunday the 13th. U.S. is sending anti-missile system to Israel to bolster defenses against Iran. The move comes as U.S. and Israel are holding talks on a possible Israeli attack on Iran. You see how that works? If Israel agrees to only attack certain targets, we will send an anti-missile system. But listen carefully. The Biden administration is sending an advanced anti-missile system to Israel along with American troops to operate it, moving to bolster its top Middle East allies' defenses against an Iranian attack, the Pentagon said Sunday. The soldiers, just under 100 troops in all, would man the system, a rare U.S. deployment to Israel. How quickly the Pentagon can move the system to Israel wasn't immediately clear. The administration didn't say when the THAAD would be put in place. So who's the contractor for the THAAD system? Lockheed Martin. Who are the key subcontractors? You know, the boys, Raytheon, Boeing, and Honeywell. So when did the politicians start buying Lockheed Martin? Third quarter, 16 of them. See the big orange spike with the big white arrow pointing at it? See the little white arrow below? That's the price they got in at. You see, these little conflicts and skirmishes are carefully planned. So now, can we assume the Israeli strike will happen after the THAAD missile system and the U.S. troops arrive? Stay tuned. Okay, so what's next? There is no Fed meeting scheduled for October, so we will have to wait until November for the next rate decision. And if we keep getting hot inflation readings or crazy labor numbers, we may not get another rate cut in November. Accept it. It's Monday, October 14th, the Columbus Day holiday. The U.S. bond market will be closed, but the stock market will be open. October 15th and 16th is Ripple's Swell Conference in Miami. Thursday, October 17th, 8:30 a.m. Eastern, initial jobless claims and U.S. retail sales. Next week, between October 22nd and 24th, is the BRICS Summit in Russia. Thursday, October 24th, 8:30 a.m., initial jobless claims again, and then at 9:45, S&P Flash U.S. Services and Manufacturing PMI. All right, did you notice the Ripple Conference is exactly 1 week before the BRICS Conference? I'm hoping something exciting comes out of this event ahead of BRICS. We could also get some market-moving headlines out of the BRICS Conference and right before the election. BRICS could certainly affect crypto, precious metals, the U.S. bond and stock markets, not to mention the U.S. dollar. On a side note, I expect Bill Wang of Archegos to be sentenced on Monday, October 28th. I just want you to know it took bringing down a 168-year-old Swiss banking giant before our government and its regulators finally went after this hedge fund. I will remind you, when Credit Suisse went down, the CEO didn't blame Archegos, even though the media did. He blamed retail and social media. I will never let you forget that Credit Suisse was short AMC, had a sell recommendation on AMC with a price target of 95 cents. Since they're also a prime broker, I conclude that they targeted AMC not because they wanted to, but rather it was an effort to assist their hedge fund clients or even protect themselves. It's my theory, and I don't know if I'll ever be able to prove it. How many hedge funds are in the U.S. alone? 3,872. How many family offices similar to Archegos? 6,000 to 7,300. How many hedge funds closed during the 2008 crisis? Nearly 700. Sleep tight, hedgies. Beginning Tuesday, this week is all about the earnings. Before the bell on the 15th, United Health Group, J&J, B of A, Goldman Sachs, Citi, Schwab, PNC, Walgreens. After the bell, Interactive Brokers and United Airlines. On Wednesday, I'll be watching Morgan Stanley and U.S. Bank. On Thursday, before the open, Blackstone, and after the bell, Netflix, and then on Friday, American Express and Ally. Well, Seeking Alpha is opening up this week with a hit piece on AMC. I say expect more and more of these as we approach the third quarter earnings call. And notice no author's name again, but a screen name. Instead, Wyco Researcher. So this is journalism now. AMC keeps burning cash and issuing stock. It's a disaster for investors. So what about this Wyco Researcher? Well, he's got a bachelor's in economics, a master's in finance. He usually writes about distressed companies and companies in Chapter 11 bankruptcy. He's semi-retired after spending decades in investments. Seeking Alpha rates him with 1 star. His average return is negative 17.10. So this is obviously a Wall Street titan. Under summary, AMC received a D default rating by S&P last summer, but the rating was raised back to CCC plus after their debt refinancing was completed. Okay, well, Wyco, let me explain something to you. Whenever you swap stock for debt or debt for stock, that's considered a default. So they'll downtick your rating and bring it right back up. I'm surprised you don't know that with all your decades in investments. Over the last 4 years, AMC has burned up $2.59 billion cash for operations and raised $3.36 billion from new stock sales. Okay, it's the largest business of its kind on the planet, so we're going to build up, we're going to spend some money on operations, Wyco, and also, I would prefer if Adam Aaron would build the stock price and then and then dilute. But this is what it's like when you got a CEO cooperating with Wall Street. The long-term outlook for the movie theater industry and AMC is bleak. Okay, I'm hearing just the opposite. But listen, you keep trying and we'll keep ignoring you, bro. Okay, let's go back to June 11th for Archer Aviation. Archer receives FAA certification to begin operating commercially, right? And then a month ago, Archer surpasses 400 test flights this year, achieving company milestone 4 months ahead of schedule. And yesterday I got excited when Tip Ranks dropped this, but it wasn't what I thought it was. Archer Aviation surpasses key milestones on path to FAA approval. So you should know, in addition to its Part 135 certificate, Archer previously announced it had received its Part 145 certificate from the FAA, allowing it to perform specialized aircraft repair services. This means Archer has now received the 2 key operational certificates required from the FAA for it to be in a position to begin its air taxi operations when Midnight receives its type certification. So that's what we're looking for next. We want the Midnight aircraft to receive its type certification. That's the next headline I'm looking for. Our CEO was out this weekend. We're due for a transportation revolution, and it's coming faster than you think on the ground and in the air. The best way to predict the future is to create it. Now, this is the kind of clickbait that gets Uncle Frank every time. Billionaire Bill Gates has 81% of his $48 billion portfolio in just 4 stocks. I have to know. So obviously, number 1, Microsoft at 30%, Berkshire Hathaway at 23%, Waste Management at 15%, and Canadian National Railway at 13%. You can tell he's been hanging out with Warren Buffett. There's Bill Gates' picture with his buddy Jeffrey Epstein. So the other thing I want to point out, Bill Gates has a $2 billion short position against Tesla, according to Elon Musk. His comment, since Gates has a multi-billion-dollar short position against Tesla while claiming to help with global warming, I guess I have some trust issues with him too. Elon Musk predicts Bill Gates will be obliterated for shorting Tesla stock. This morning, I'm hearing Tesla Model Y sales in China hit 48,200 in September. That's the highest year to date. Be watching for that headline. And yes, November and December already look like a haunted house for stocks, bonds, oil, precious metals, and crypto. In November, I expect 3Q earnings releases from AMC, Archer, and Joby, and the November 5th election is now only 24 days away. We won't have an October FOMC meeting, but the November meeting is scheduled for the days immediately after the election, the 6th and 7th, and it's already getting amped up. What if Biden resigns in late October and swears in Kamala as president so she can run as an incumbent? I bet Hunter gets pardoned then. He's expected to be sentenced on November 13th. I also believe the immediate future of crypto could swing on this election. Trump has promised to dump Gensler on day 1 in office, but that's not until January 20th of 2025. That's 100 days away. What is Gensler capable of until he's thrown out in the street, or worse, what will he do if Kamala wins? GameStop's next earnings date is unconfirmed, but expected on December 4th and typically after market hours. The big question is, will Ryan Cohen drop his future plans for the company before or after the election? My guess is after, which would make the 4th quarter GME earnings call, in a word, explosive. By the way, December 17th and 18th will be the last FOMC meeting of the year, and that very same week, Friday the 20th, will be this year's last quadruple witching day. Even that week has the potential to blow a hole in your 401k. So buckle up, buttercups. You wanted to see some action. I say it's finally here. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.